Good afternoon, everybody. Welcome to today's meeting of the Hawaii State Tax Review Commission. Officially, do we have any public testimony today? I understand that none has been submitted, so we will move on. The minutes of October 13th. Does everybody had an opportunity to review those? Were there any changes that anybody would like to see made? Hearing none, then may I have a motion to approve?
So move.
Thank you, Murray. Second. So I am going to call your name and you can tell me whether you approve or do not approve. Scott?
Aye.
Alton?
Approve.
Sale?
Approve.
Winston?
Approved.
Murray?
Approve.
And chair approves too. So, okay, moving on to continued discussion about our priority issues. We have some follow-up to discuss today. And let me start with the recommendation on tax deductions and exemptions that Kate Lloyd sent. She is unable to be with us today, but she did have her memorandum sent out earlier. Excuse me. And so her recommendation is that the legislature consider both doubling the current standard deduction and immediately indexing the standard deduction and personal exemption to Hawaii's inflation rate. Furthermore, the Hawaii Tax Review Commission urges the legislature to adjust Hawaii's income tax brackets for inflation to avoid unduly burdening lower income taxpayers. So that is the proposition that she would like us to entertain. And then further in her memo, she outlined some questions that she'd like the TRP to provide some data on. So calculating the revenue impact for doubling the deductions, indexing to inflation, determining whether the changes that are proposed would allow low-income taxpayers to forego filing their income taxes, addressing whether withholding rates need to be adjusted, and addressing how many taxpayers would benefit from this change. And yeah, I think there was also some discussion about the impact on tax credits, both refundable and non-refundable, like the EITC. Any discussion? Any additional thought on the analysis that would make it clearer whether or how this would impact our tax system?
The points that she noted for further research all made sense. I think in her write-up, she also noted that the intent would be to provide that study or that table of double, triple, and kind of the different options and what that all penciled out to be. That makes sense as well. So the only addition I had was kind of maybe an obvious one, which is whatever other recommendations we have. For example, if we put in the recommendation about taxing defined pension defined benefit plans, to show the net effect if all these changes were adopted, because it'd be nice to see, because some of these will counterbalance each other. And so it's not specific to hers, but in general, whatever pieces we put into this thing, it would be nice to also show the net effect overall. If they were, you know, if a miracle were to happen and they were to take on the entire slate of our recommendations, what would be the net effect?
Yeah, that's really important. And that's one of the things that I think we're going to talk about in balancing these recommendations. So in following up on her recommendation here, I know that BIBARS had done some analysis of the proposed effects if you did it in various ways. For the questions that she's posing at the end of her memo, does that apply to all of the different options or just the one that she is thinking is most likely to be practical, which is doubling?
My quick comment would be that you could certainly do the numbers on all the permutations of that, but my concern would be that would be data overload. And if you have, tables and tables and tables of different variants and different combinations of these things, it'll be a lot for the legislature to take on. And I kind of think we'll get further with less in terms of having analysis, have some numbers, but don't go overboard and get them to just kind of grunt and throw the whole thing away. That's just my personal view. Is I'm a little bit worried about data overload, but I'm certainly open to doing, having the TRP do all that research. It just might be a bit much.
Any other thoughts on that?
Yeah, maybe you could do a couple models and then just have the one that we believe would be the fairest, the one we could actually recommend. Because I think once you do that, then the indexing should, in theory, take care of escalations after that.
Yeah, I think that is a good recommendation. If we want to do any more analysis than BIBARS has already done, we can do that and then use our discretion to decide which one we want to advance to the final report. Because I think you're absolutely right, Murray, that too much information can just be deadening. Okay, great. Then the next item that we can discuss, I would note that we talked about the green fee last week, and I was presenting my memo. You made several recommendations on improving the memo. After the meeting, I actually redrafted it, but I forgot all about it and I didn't send it to you. So I will send you the revised memo after today's meeting. Alton, would you like to talk about your memo on Simpson-Bowles Commission?
Okay, so at our last meeting, we had a lot of discussion about this issue, how I can, I guess, or what I should add or put in the memo. So I hope I incorporated everybody's suggestions. I know one thing that we discussed was making specific recommendations, and I really struggled with that, not having enough information about the different issues. I find it very problematic to make a specific recommendation, like you should assess a 3% fee or a dollar amount. I just think that we would need more information before we can really drill down and make very specific recommendations. And I don't know if we have the time or the budget to go out and hire a consultant. And in my point of view, this is kind of like a not real high priority item. Is I think in the past, the legislature just kind of looked at it and kind of shoved it in the closet. So I'm not sure if we want to spend or invest a lot of money on this particular issue. But having said that, I sent a memo out, and any questions or comments?
I would just say that I thought your selection of issues was really good, and I'm glad that you were able to point to an existing report and some other data sources so that it's clear that there's some meat here, even though we don't need to spend a lot of time doing it in advance.
Thank you. I did talk to Scott about a few issues, and he was good enough to share with me. I guess on Maui, the Board of Water Supply is, totally a separate entity. They don't get any funding from the general fund. They pretty much are self-sufficient. And I don't know how the other counties operate, but those are kind of issues I think I would be more comfortable knowing about before making a specific recommendation.
I understand that the boards of water supply are separate from state function, and so they don't get state funding. Their intersection with the state is includes having the state combine all of their payments for retirement, but otherwise I think they're pretty much county function. Isn't that right, Scott?
That's true across the board for all the counties.
That's my understanding, yeah. I think Maui is the only non-semi-autonomous. It's a county function. All the rest of the counties are semi-autonomous. The only other one that I don't know how it works, but wastewater, I'm really not sure. The director didn't get back to me as far as how much subsidy that they have or not, but I'm not sure about wastewater.
But even if water and wastewater are not strictly state functions, they are big, important issues for all of us
Yes.
to be, and certainly for legislators to be mindful of, and hopefully a more expanded audience with county policymakers as well.
Yeah, I agree with what Alton said. I think his memo hit it at just the right level. You're noting areas of concern, not getting into the weeds on specific recommendations. I think it was the right level.
Thank you.
Okay, any other discussion on that? Thank you very much, Alton. Winston, do you have some additional information that you wanted to share with us today?
Not right now. I apologize. I plan on getting a memo out, but I've been traveling the past week, so it's been tough to get that together. It's going to be shorter and a lot more concise than my last memo, but essentially the same recommendations, that a few of those exemptions be removed, and that we just consider changing a few of the language that needs to be streamlined. I did give some thought and research to the idea of whether or not we should require a disclosure or some sort of waiver for confidentiality for the claiming of exemptions. And I did some research on that. I don't have a memo because it's really inconclusive across the board, whether it be at the state or federal levels. I don't have any precedent or law as to how the Hawaii constitutional rights of privacy would affect that. I wasn't able to find any conclusive research on that, but I do think that there has to be a balance between the public interest in knowing where these credits and exemptions are going to, and at the same time protecting the taxpayers' rights to privacy, because I think the Department of Tax has, enormous power to investigate, finances and proprietary secrets and, the information that taxpayers have. So it's a little bit tough, right? I wish I could have brought a recommendation, but I'd love to hear if the commissioners had any other thoughts on whether or not we'd be in favor of some sort of confidentiality waiver or some disclosure requirement for those who wish to claim tax credits, especially those that are research-based and meant to incentivize certain behaviors.
I think that's a good idea, Winston. I remember back when the QHTVs were hot. I mean, it was kind of like a circus out there. So I think some disclosure would be, I think would make people more accountable at least.
Alton, you said QHTVs. I don't think I know what that is.
Qualified high technology business tax credit.
It's the Act 221 stuff.
Yeah. It was kind of
Okay.
a black mark on the state. Did Ted have his hand up? Am I seeing that right, Ted?
Oh, yes. Ted, please.
Sure. If I may, just in terms of precedent, most of the tax chapters in Hawaii have a confidentiality provision. Fuel tax does not. In fact, fuel tax goes the other way and says that the statements, so for us, that's the return, the statements filed under that chapter are public information subject to disclosure. So I think that kind of helps us answer the question of whether or not it can be done. I think you guys are still trying to wrestle with when it's appropriate, but I just wanted to kind of add that so you guys know that if that is one of your recommendations, it is possible.
Wasn't there
The
also
one thing, yeah, the one thing I would say just is that we would suggest that the claimants be given prior notice that claiming it, any claims would be disclosed so that they have the opportunity, for instance, to not claim it if they don't want their identity disclosed. In the past, we've testified that it's kind of unfair to do it retroactively. In fact, it was in relation to QHTV. And I know a lot of people and probably the department has submitted critical testimony of it in the past, but that's been our position in terms of advanced notice to the taxpayers when it will be disclosed.
Appreciate
Understood.
that. Murray?
Wasn't there legislation recently? I thought there was an attempt to make the film tax credit folks sort of reveal themselves and report on who got that. Does that sound right, Ted? Am I remembering?
I believe that provision did come up last year. Currently, the Department of Business of Economic Development, Tourism, DBET, is required to submit a report to the legislature that gives the more granular data in terms of the type of cost that each of the productions paid. But the even under that report, the identities are still redacted. So yes, the proposal was to go one step a little further and kind of unmask that as well. So it can be done legally, but obviously it would require a change in law.
Okay. And I seem to recall that earlier tax review commissions had talked about ensuring that there was a sunset provision so that each of these tax credits could be analyzed for their efficacy in meeting whatever goal there was when they were established. Is that something that we would want to continue to advocate for?
I think that's a worthwhile recommendation, just piggybacking off of the previous commissions. I know it was proposed, and I know the state auditors have taken that into account too, and their constant reevaluation of tax credits and exemptions. So I think that that's a simple recommendation, and I would be in favor of that.
Thank you. So the tax credits, the GET tax credits that you were looking at, Winston, as I recall, they didn't have significant financial consequences. Is that right?
No, the primary reason why a few of them were being proposed as being axed were because they were not being utilized. And the whole point was that if they're not being utilized, you either use it or you lose it. And streamlining the credits and exemption system should be a primary goal of the commission.
Yeah, I think that makes a lot of sense. So the other item that was on your plate was the exemption of certain retirement income, Social Security and pension income. And is that something, I think you were talking to Seth about having TRP provide some additional data so that we could update that.
Right. I think that I wasn't ready to give an actual recommendation on whether or not to, to axe the exemption or to continue it going forward. But I think that it's important that the commission research and provide some sort of measurement, because the last real measurement of, or at least in-depth examination of the exemption took place back in 2003. And that was under the assumption that 401ks were gradually going to phase out the pension plans for a lot of workers. And while the amount of the exemption claim has increased, I'm not sure if that's, if the assumption that we operated back in 2003 is still relevant. So at least to have the research done to see how much this has increased over the years, and just to see how many actual pensioners and how many pension plans are in place to see if it's going to become more expensive going forward.
On our last didn't on our last call, Seth say, I made some comment that from one of those past tax review commission reports, I think they estimated around 330 something million. And as Winston said, that was an old number, but then I thought Seth came on and said some number that was over 400 million for the current number. So I think they actually know what that impact is. We just need to double check it, but I think it's getting bigger, not smaller.
Right, and I would like to get that in writing and actually on a report or an addendum or some sort of appendix, so we could just include that. I think just including that in the report would be sufficient enough for this topic.
Yeah, I agree. I understand that this is an issue that is politically not very attractive, but I also think that it has tremendous implications for tax fairness and tax adequacy with an aging population and more and more people who have retirement income that isn't taxed. It just questionable how fair our tax system is when we can just set aside that as a wholesale policy. Great. Okay. What else do we have on here? Oh, okay. So we are up to the recommendation on property taxes. And I had earlier presented a memo to you, and my recommendation was the Tax Review Commission recommends that the counties further explore opportunities to use real property taxes as a means to increase the equity and adequacy of the overall tax system and leverage resources to meet future needs, particularly for housing for Hawaii's working families. Scott, I know that you wanted to address that recommendation too. So would you like to do that now?
Sure. One thing for sure is I can speak for Maui County, but I couldn't really speak for the others. For Maui County, we do put a lot of money away annually to affordable housing. In fact, we have a county ordinance of 3% of the revenues from real property tax goes to affordable housing. On top of that, the mayor put an additional 1% into affordable housing. And with the 3% GE TAT tax that's coming to the county, it will be another driver for money set aside for affordable housing. So for sure, at the county level, we are addressing affordable housing. The biggest issue we have is whenever we figure out what lands we want to put the affordable housing on, the community comes out and says, well, not in my backyard. So, putting money away is one thing, but for sure, I think I can speak not specifically to every county, but every county level, every county is addressing affordable housing. To what level they can get it done, that is the question. For me, a lot of people said the low income bracket needs housing. I really don't care. Every income level needs housing. I have county employees who cannot get housing. We've had specialist positions that are hard to fill at the local level. People come in from the mainland, 3 months they go home because the rent for a 2-bedroom is $3,500 in Central Maui, and they just can't afford it. So, even at the doctor, physician, nurse levels, for people to come in, we can't get them because there's no housing available. So it's not only the poor that needs houses, every level needs housing. So that is something that we're addressing at a local level. That being said, I understand the chair's recommendation to ask the ledge or ask the counties for consideration, but be honestly, it'll only be consideration because ultimately, whatever they want to do at the local level, whether it's the mayor or the county council, they'll have their own agenda. So I know how they feel about it. You can always put it out there, but ultimately, the mayor's going to propose his budget, and the council basically plays with the rates to get the revenue. So I understand your point, Chair.
Thank you, Scott. And I do appreciate that the counties have really stepped up. Even Honolulu County is doing some things which here on Oahu, we seem to be a little bit slow on the uptake on some of these issues. I guess one of the reasons I would like to include the information that I put out in my earlier memo is that a couple of the early commissions addressed property taxes and the rates and the fact that they had decreased since the Constitutional Convention that gave the responsibility to the counties. And I wanted to bring that up to date. Hawaii has had low real property tax rates for residential for a number of years, but I credit the counties for doing a lot in recent years to update that, to increase rates on non-owner occupied and high-end housing. And I think that that has a really positive effect, both in trying to address some of the inequities in the housing market, but also as an opportunity to bring in more revenue. I personally support building more housing with the additional revenue, but I know the counties certainly are going to have additional costs, including water and wastewater going forward. So I understand that the counties may not feel that they need recommendations made to them, but I do feel that they might find the information in the memo that I drafted useful to them.
I certainly, Beth, don't object. I guess my question, I think we discussed early on in this, is it a disconnect for the State Tax Review Commission to make recommendations to counties in general? And that's the part that I was I understand your passion behind it. And I mean, I've lived here for 10 years and I'm still renting because of the prices of housing out here is insane. I just can't believe it. But so I get it, but it feels like a little bit of a miss when you're making recommendations to the State Tax Review Commission to the counties. I feel like they might use it, but they're probably just going to ignore it. And it's not kind of strictly within our kuleana as the State Tax Review Commission. But I don't object to the idea.
I'm wondering if the recommendation is more to request for a constitutional convention. I mean, that's the trigger that made it home rule. I don't know if the Constitutional Convention is something that would trigger re-looking at the state having control of property taxes. Like if everybody votes for it, obviously it could go back, right?
Yeah, it does seem like a constitutional amendment would be necessary, and that would be a state issue. So that's the way that you put it back on the state side, I guess. It's a different ask for sure, but that does put it in the state side.
It's interesting that you should bring that up, Scott, because I thought that the last time there was a proposal to have the state impose a property tax for the benefit of education, the counties were not very much in favor of that.
Oh, I'm certain the counties won't be in favor of that. That's not a doubt. But I guess the question is, if it goes back to the ballot of whether or not there should be a constitution amendment, then that's up to the people, right? If they vote for it, they vote for it. But at the county level, for sure, they don't want to. It will possibly affect your bond rating because now you don't have total control over property taxes. So from a county level, yes, there may be an impact to each county because you don't have that level of authority. That's no doubt. Don't worry. The state legislature is looking for so many ways for the county to do more. So I'm sure they're going to have something coming out. Yeah.
Okay. Thank you. Okay. Well, I think that addresses all of the issues that we've already discussed. The next item on our agenda, if you're ready to move on, is the process to analyze and balance the tax system based on our recommendation. So as I look at the list that we are contemplating, we've got the carbon tax. We are still awaiting the report on that, but Murray
Yeah, actually, McKenna sent me an email just today that says she's really close to being ready to do a presentation, updated presentation to us. And I just responded to her and said, just wanted to make sure she had those kind of high level things that we were looking for. And I'm just waiting for her response, but it could be, as early as next week that she could be ready to go. So I'm not sure when our next meeting is right now.
I believe our next meeting is scheduled for November, gosh, and I forgot already,
17,
17th? Okay,
I believe so.
That might be my guess, is that might be a little late if we're trying to get a report done by the end of the year to not, we might want, all I'm going to say is if she's ready, we might want to consider, I know we all have too many meetings on our schedules already. We might want to have a special meeting just to discuss that, because she's ready to provide preliminary analysis to us. And if we say, yes, we like that, then she can start writing that portion of the report. If we don't like it, then we need to redirect her. I'm just worried if we wait until the 17th of November, that's really late.
yeah, I also think that that's kind of a long time from now. So later in the agenda, when we're talking about scheduling the next meeting, let's look at an earlier date to meet. But anyway, to get back to balancing the recommendations, not sure what she's going to be providing for us, but it's entirely possible that the recommendation for the carbon tax wouldn't have any implications for state revenues if the tax is collected and then redistributed. Is that right, Murray?
Well, yes and no. So what you said is right, but remember, one of the top questions we have from McKenna is her report showed that if you return all the money in equal shares back to Hawaii's taxpayers, that all income quintiles are better off from the carbon tax, because you're taking carbon tax effectively from visitors plus locals, but only giving it back to locals. So that was a strong finding, but one of our top requests for her was to say, okay, what percentage could the state actually keep and spend and still keep at least the bottom 4 quintiles? So everyone but the richest 20%, if you could still make sure those folks are better off, and then maybe the richer 20%, maybe they're a little bit worse off. What percentage is that? Because that could be meaningful if that's 10 or 20 or 30% the state could spend. That helps with that net analysis, because you got, the personal exemptions and standard deductions reducing revenues. If we do the retirement thing on pensions, that increases revenues, and carbon tax also increases revenues if there's a percentage that the state can spend. So that will be important in that analysis.
Okay, yeah, you're right. Okay, so that would be one of the elements that we would need to include in trying to balance the effects on the system. The green fee. Now, we are just recommending an implementation plan and study at this point. So I believe we are more in favor of spending whatever money might eventuate from that fee on direct investments in the environment. What do you think about that? Should that also be calculated in balancing the tax system, or is it kind of outside of that?
It doesn't go into the general fund with our proposal, I'd say no. And then also, because we're recommending a study, not a specific fee or amount, you can't really provide a calculation, because we're not to the point of recommending a certain fee or a certain percentage. That's what the study is supposed to do. So I'd say it's premature to include that.
Okay, that sounds good. The real property tax issue, if we included in our final report, it would have nothing to do with state revenues, so that doesn't need to be balanced. And the Simpson-Bowles Commission also doesn't need to go into balancing the recommendations. So that leaves us with the deductions and exemptions question. I think that we should talk about the potential impact of taxing retirement, not just let legislators know the magnitude of the amount of the untaxed revenue, untaxed income. Winston, right now you're saying that there really are very, very few implications from the GET exemptions recommendations, so that probably has little effect.
That's correct.
Okay, and then sales recommendation for Dotax capacity.
Is additive to income. State revenue.
So so those are the issues that need to be discussed in reference to each to the other. I guess we're still trying to figure out the revenue implications for at least some of them. Any other thoughts on how we go about making sure that all of this makes sense as a package when we're all done?
Well, assuming we can get, as Winston was saying, assuming we can get Seth and his folks to provide, a good number in writing. He threw out some number last time. If we get that, we've already got that sort of study, that table on the double, triple, whatever, the personal exemption, standard deduction. I think there were some numbers also for the indexing to inflation of the tax brackets. We have a lot of that stuff already. McKenna's going to give us some numbers on how much that carbon tax could end up being and what, so that we'll have that number. So I think the major piece that we don't have in our hands yet is what Winston was asking for, is that pension exemption number. What is that? Although there's one piece we haven't fully talked about yet, is if we do make the recommendation of, this equity-based recommendation of taxing both defined benefit and defined contribution, not just defined contribution, are we also going to throw Social Security into that as well? Previously, we talked about pensions and Social Security together, but I just wanted to point out, not that I'm a politician, but a political middle ground could be to tax defined benefit and defined contribution the same, but to leave Social Security alone, since whether you got a pension or a 401k, in theory, anyone could potentially get Social Security. So that's another option. That will reduce the increase of revenue if we exclude Social Security and only include pensions. So you get more money if you tax both, but that's kind of a middle ground if we wanted to say tax pensions, yes, but leave Social Security alone. I'm not trying to raise issues late in the game, but that will be important in getting the number from Seth. Is it just pensions or pensions and Social Security?
Right, and I think that when we take a look at this for our analysis, we also might want to think about, should we exempt income up to a certain amount of $50,000 worth of revenue from either Social Security or pensions or whatever.
We could, although if we double double the standard deduction, personal exemption, or I always get those backwards. This personal exemption, standard deduction, get them backwards all the time. But if we're doubling that and then indexing tax brackets to inflation, indexing the deductions and exemptions to inflation, you're partly doing that because you're raising the bar on how much you have to make to get taxed. I think if we do have the pension and or Social Security taxation thing, it probably does make some sense in terms of fairness. I think some of us talked about before having like a, 3 to 5 year wait period before it comes in, so people can have some time to plan. So between those measures, I don't know if it's necessary, but I mean, we could have another number for the exemption to kick in at.
Right. I think one of the alternatives too that was contemplated in prior reports when discussing the pension and Social Security exemptions was that we look at increasing the personal exemption, especially the one targeted towards seniors, because for senior aged taxpayers, there is a larger personal exemption that they claim on their state income taxes. So that would apply to all senior taxpayers and presumably those with a fixed income and those that I figure that this exemption is trying to address from the get-go. So from a fairness perspective, that may be the best alternative, is to look at that exemption because it already exists, and looking at the amount, seeing if that can, apply to all taxpayers and all those on fixed incomes.
So Sale, I know that you had some numbers in your memo about Dotax capacity. How would you see that playing into balancing all of these recommendations?
Yeah, well, anything that's enacted as far as new tax, it's gonna require people with skills to be able to enforce it. I mean, if we're talking about an entirely new tax system, like the green, beside the green fees, which wouldn't be a tax, if we're talking about anything else, it's gonna require some specialist people. And I think I pointed out in the memo that in today's recruiting environment, that's a tall task. So you're gonna need a dedicated source of revenue or funding, I guess, for DO tax, because those are the people that are going to be charged with enforcement. So I don't exactly know how, it depends on what level of new things arise out of what our recommendations are. But I guess the general point is that it's going to require whatever we suggest that is involving a tax that will be administered by DO tax will require additional personnel and systems to support. So you can't have one without the other if you are going to be effective and fair. That's my kind of takeaway on it. Because I think we're leaking revenue right now.
So basically, when we're trying to figure out how all of these different proposals would affect overall revenues, there isn't a specific revenue figure that you're thinking, but any changes that we make to the tax system need to.
It should be net. Yeah, net of costs.
Yeah,
because there should be some amount of enforcement cost component that goes into that reduces the amount of proceeds that we expect to get, because it should be the recommendation should be costed with the expense of enforcement.
Okay.
Yeah.
Okay, so it seems pretty clear to me that as we gather more information, we need to ask TRP to help us see how all of it is going to be the overall effect, and what happens if you only had one as opposed to the others, and how they work as a package. Any other advice, questions, comments about ensuring that we balance the system? Okay, well, great. So let's move on to the schedule of our next meeting, because right now it is not on the calendar until November 17th, and I think we need to meet earlier than that. How about November? Let me check my own calendar. I'm looking at either the 3rd or the 10th of November. Anybody got a preference?
Just focused on how much we still have to get accomplished, I'd say the 3rd, and I'm available, but I understand people's calendars are full.
Okay. Others?
I'm available on the 3rd, not the 10th.
Same here.
Same for me.
Okay, well, that sounds great. Okay, so Rick, could you make sure that we are on the calendar for November 3rd? Or actually, I should check. Is that possible with Dotax staff and the system?
I can book it for November 3rd. When Seth gets back, then I can check with him. If not, we'll probably have to have Ted sit in or something again.
Okay, well, yeah, it sounds like the 3rd will definitely be better for us. So let's hope that that works out with you, and at least for right now.
Could I ask Mary, do you know approximately how long the presentation may be?
From McKenna,
Yes.
I would guess that she can tailor it to what time we have. I don't think it's going to be overly long. So if you've got like a hard stop or something, I'm sure we can work within that.
Yeah, I just got a 1:30 council hearing, so that's
I
all.
think we could be well within that.
That seems really doable. Okay, well, if there is no other business, I am pleased to adjourn today's meeting. Thank you very much for being here.
Thank you.
Thank you.
See ya.
Thank
Bye.
you, everybody.